Finally this week, Iran, where the pursuit of a nuclear program has taken a big economic toll over the years. But now, with Tehran agreeing with Western powers to limit that program, there is some potential for some very good economic times. Iran has been living with sanctions for almost a decade, but as you'll see, it was the latest round in 2011 that did the real damage. These numbers come from Iran's central bank. What was a $400 billion economy contracted 9% in the second and third quarters of 2012. And the US Congressional Research Service estimates Iran's economy is up to 20% smaller than what it would have been without the sanctions enacted after 2010. As international companies shut up shop, unemployment went up to 20% in the middle of 2012. Iran reckons the number is actually closer to 13%, but to put that into perspective, that would be 3% worse than US unemployment during the Great Recession in 2009. The thing is, Iran has got a lot going for it, namely the world's fourth largest proven oil reserves and the second largest natural gas reserves. But, according to the IMF, Iran's energy exports slumped almost 50% in 2012-2013, down to $63 billion. So that is all the bad news, but we did talk about some potential good times, didn't we? That'll happen if Western oil and gas companies return to revitalize the industry, which is in need of new technology and investment. Earlier in the week, I was joined by Sean Evers, Managing Director of the Gulf Intelligence, an energy networking firm, who's written a report on this very matter.
As a friend of mine, an Iranian friend of mine said to me the other day, just for starters, it needs 100 five-star hotels. You know, so it needs everything. I mean, if you take an upgrade that's 40 years unaccounted for, from a consumer point of view, from a macroeconomic point of view, there isn't one thing you could say the economy of Iran does not need or would benefit from. So it needs everything.
Well, let's narrow it down to oil and gas then. What does it need from the rest of the world, investment-wise? And we're not just talking, quote-unquote, the West here. We're talking China as well. Tell me about what they can bring.
Iran needs a significant amount of foreign investment in order to upgrade its oil and gas facilities, to develop new oil and gas resources. So it essentially needs dollars and investment. And it also principally needs the lifting of sanctions in order for it to be able to sell all of its oil in order to, you know, earn the revenue that comes with that. Iran depends, although the oil and gas industry only makes up 20% of its GDP, it depends on oil and gas revenues for 80% of its foreign revenue reserves.
Will those foreign investments come in? Iran has been somewhat demonized over the last few years. It's been through the sanctions period. The nuclear issue is always there. Yes, there's been a change in leadership and there's been a softening, we have to say, but will those companies want to come back, do you think? Have they been scared away, possibly?
Well, it'll all be in the terms of the opportunity that will guide the foreign investment. There's two things they'll have to consider. One will be, what is the legal framework from an international point of view vis-a-vis the lifting of sanctions? And that will be the first hurdle, because the probability may be that the sanctions are a bit of a fudge. As you may know, Iran, the lifting of the sanctions, I should say, will be a bit of a grey fudge in order for both sides to appear in a win-win situation. So the Iranians want immediate and complete lifting of sanctions. The Americans and the P5+1, as it's called, want some kind of phased out lifting of sanctions based on performance and compliance to the agreement. But in that grey zone, it will give the opportunity for some maybe European countries to say, well, actually, sanctions are sufficiently lifted for companies to go in and invest, and American companies who may be bound and limited by the Congress until there is a crystal clarity of legal framework might hold back. And it may be a bit like Kurdistan in Iraq, where a lot of small independent European companies poured in under a quasi-legal framework. There was a bit of a grey zone, and then as clarity emerged in the following years, the majors came in and bought up the equity and the opportunity from the first mover.
So if Iran gets itself together and gets it producing oil and gas like this and out into the market, how is that going to change the market? How is, say, Saudi Arabia going to afford this? And you know, with all the oil price fluctuations we've seen recently, how do you think that's going to play?
Well, Iran has what is generally regarded as 1 million barrels a day out of the market prior to the last wave of sanctions, which really restrained their export capacity, Iran was exporting about 2.5 million barrels a day in 2011-12. Now it's down to about 1.3, 1.4. So generally 1 million barrels is expected to come back on the market once sanctions permit it to. That time period, how quickly that comes back on, is the question. Generally, it's now acknowledged between 6 months to 12 months from a production point of view. But of course, they have a lot of oil in storage, which could immediately come on the market. So that will generally, the expectation, once the sanctions are agreed that exports can reconvene, prices could see a downward pressure again because of this extra supply, unless Saudi Arabia or other major producers in OPEC, for example, facilitate the return of Iran by pulling back some of their production, or else we could see another wave of downward pressure on the oil price.
Can I ask you about China as well? Surely it had a chance to get in there with Iran. Whilst all these Western sanctions were in place there, didn't it have a chance to sort of exploit that almost?
Well, China had unfettered access to Iran over the last few years with limited competition from, let's say, Indian companies and so on. But actually the Chinese either chose through intention or by default and inability to blow that opportunity. They were actually evicted out of a major oil field development in North Azerbaijan oil field a year ago. They had the rights to develop an oil field. They were expected to drill about 180 wells. They drilled only 7 over the time period and were actually evicted a year ago, nearly to the day, that from that oil concession opportunity. They retained the South Azerbaijan. It's 2 oil fields on the border of Iraq. And so generally relations with China are surprisingly a little bit tense. The Indians and the Chinese have either chosen not to engage heavily and develop the opportunities there, or they haven't had the technology or the ability to do so.